As the second half of the year begins, it is a good time to take stock of the past 6 months and outlook for the next 6 months. Cadre Securities has done that in its report, Navigating the Uneven Path of Recovery. Gbolahan Ologunro, analyst with Cadre Securities, joins us this morning. Hello, Gbolahan, great to have you.
Good morning, Ladi. Thank you for having me.
Good morning. Good morning. Happy New Month. How would you assess the performance of the economy in the first half of the year, and what do you expect in the second half of this year?
Yeah, so for us, the performance of the economy has been largely unimpressive in the first half of the year. Of course, we still have to agree with the fact that we are coming out of a recession in the prior year, induced by the twin shocks we faced due to the pandemic and the downturn in oil prices. However, we saw the economy recovering earlier than expected in the fourth quarter of last year, and that recovery extended into the first quarter of this year. We saw the economy growing by 0.51%, an improvement from 0.11% we recorded in the fourth quarter of last year. In terms of inflation, inflation maintained an uptrend in the first 3 months of the year due to of course, persistent security challenges across major states of the Federation. However, in the months of April and May, we saw inflation moderating marginally, which we think was due to more or less idiosyncratic factors, such as consumers more or less anticipating higher prices in the month of March due to, of course, the Ramadan season, and they more or less front-loaded their purchases in the month of March, rather, because of inflation expectations for April. And in terms of the currency, the CBN has also devalued the currency to about 410 at the INE window. And since then, the CBN has also sort of equalized the official rate to the NAFEX rate. So in a nutshell, macroeconomic indicators have not really been so impressive. However, the economy is poised to remain on the growth trajectory over the second half of the year.
And your report also shows that you expect headline inflation to moderate in the second half of the year. What considerations did you take into to come to this final?
Yeah, so like I mentioned earlier, we've seen inflation moderating over the past 2 months. So for us, looking ahead into the second half of the year, we expect that trend will persist due to a combination of factors. Firstly, we had high base from the prior year, so we think that will be instrumental in sort of pushing inflation downwards in the second half of the year. Secondly, we are also cautiously optimistic that the partial reopening of the borders late last year should sort of provide respite for food items, as more goods are now being imported into the country. And of course, if you look at our current account data, we have seen that imports has increased sharper than we initially projected, as due to the reopening of the economy. So we expect that should be a positive for domestic prices in the second half of the year. In addition to that, we also see scope for improved harvest season. So unlike last year, when a number of farmers had to comply with lockdown measures and activities on major farmland was largely hindered due to the lockdown measures that were implemented by the federal government. So this year, we understand that the government has more or less fully reopened the economy. So we expect that activities on farmland should improve this year compared to the last year, even though we have still continued to experience persistent security challenges across the country. So we are cautiously optimistic that harvest season should be better than last year. And of course, that would also be positive for consumer prices, which I think has been a major pressure point for the uptick in inflation we saw in the first 3 months of this year.
Okay. Well, still looking at your report here, you see it says that you see a scope for improvement in liquidity conditions in the FX markets, given the knock-on effects of the rally in oil prices and the proposed Eurobond issuance on the FX reserves. How do you see this happening?
Yeah, so like I mentioned earlier, the CBN has devalued the currency by about 3.9%, sometimes on the back end of February. And then thus far, we've seen that the currency at the INE window has been somewhat stable at around 410 levels since that devaluation. So for us, looking into the second half of the year, we are looking at two major events that would, of course, bring some respite and improve liquidity conditions in the FX market. And particularly, maybe we should now expect a gradual reduction in that premium of about 21% that exists between parallel market rates and the NAFEX rate. So our view is underpinned by the fact that federal government is we expect that federal government should issue an Eurobond into the international market, and we are looking at a record issuance of about $4 billion. And we expect that that should be concluded by the end of this month. In addition, we also think that the sustained rally in the oil market would continue to provide support to the central bank's external reserves, and that should put the CBN in a better position to step up their intervention across various stratas of the FX market. And thus far, if you agree with me, we've seen consistent decline in the central bank reserves, and that's because the CBN is trying to improve interventions both at the I&E window and other unofficial channels. So we think the CBN would continue with that intervention over the second half of the year. And with oil prices at these strong levels, about $75 per barrel, we think that would remain positive in terms of supporting central banks' foreign exchange reserves to be able to increase dollar supply to the market.
Well, apart from your report, there's also a report by the World Bank, and it says that a full decade of economic growth in Nigeria is likely to be lost by the end of 2021. Do you agree with this, and what factors do you think they consider to come to this conclusion?
Sorry, come again. I didn't quite get to that question.
So apart from your report, there's a report by the World Bank, and the report indicates that Nigeria is likely to lose a full decade of economic growth by the end of this year. Do you agree with that? And what factors do you think led to this conclusion?
Yes, certainly. We think the views of that institution are spot on. Prior to the pandemic, the country had a number of structural challenges that needed to be addressed. If you look at prior to, of course, 2020, when we had the pandemic, we had challenges with regards to, subsidy programs bordering on the power sector and oil and gas sector. And up till now, we are still sort of battling in order to sort of overcome those challenges. And like you mentioned earlier, we still have issues with fuel subsidy. We still have issues with electricity subsidy, which is currently at about 30 billion on a monthly basis. So the implication of, all of those structural challenges is that it would continue to, limit the growth in the economy, in which case you are likely to see growth in the economy still below population growth, which implies that per capita income would remain on a downward trend. And of course, we are now looking at socioeconomic indices like poverty level, income disparity. All of those indices would remain broadly negative. So for us, we think that as long as these structural challenges remain unaddressed, the growth that we'll see this year would also remain, of course, still below the level that is needed to sort of address those socioeconomic challenges that are confronting the economy. So for us, we think that this year it should be a turning point for policymakers to take those bold decisions that have hindered the progress of the economy over the years, so that we can now, of course, have a more broad-based, inclusive and sustainable growth that would translate into improved job creation for the populace, reduction in poverty level, and also reduction in the wide income disparity and inequality that exists between the rich and the middle class.
All right, Bola. The World Bank also believes that there will be a constant decline in the country's GDP per capita despite recovery from recession, projecting the country's population to grow faster than its economy. Do you see any way out of this?
Yes, certainly. Like I mentioned, what we expect is that growth in the economy would continue to lag population growth. So we estimate that the economy will grow by about 2.6%. But of course, if you look at that number, it looks, somewhat impressive. But you need to also, acknowledge the fact that we had low base last year, particularly in the second and third quarters of the year when the economy declined by 6% and 3% respectively. So this year, you're likely to see the GDP numbers for Q2 and Q3 being flattered by that low base effect we had in the prior year. But notwithstanding, our growth expectations still remains below the population growth of about 2.7% to 3%. So that implies that, for GDP per capita, it will still remain on a downward trend. And of course, for us, we think this reinforces the need why government needs to sort of address those structural challenges, the insecurity challenges we have that is also affecting food production in major states across the Federation. We think these are burning issues that needs to be addressed. And for the monetary authority as well, we think, the currency crisis is one that needs urgent attention this year as well. The CBN rate framework increase investor confidence and also sort of bring some flexibility in the pricing framework of the currency. So we think these are issues that, of course, the CBN also needs to address if they are to sort of encourage the inflow of long-term capital that would support capital formation and increase job creation in the economy. So this, we think, for both the fiscal and monetary authorities, those structural challenges should be addressed this year if they are to sort of lift growth above population growth and ensure that GDP per capita improves in the medium to long term.
All right, well, the bank commended the President Buhari, for taking bold steps in reforming the country's deteriorating economic condition while advising the government to deepen its recent reforms that allow private sector investment for speedy economic recovery. What steps do you think they are referring to?
Yeah, so for us, we think that, those reforms still borders around two major sectors. If you look at the power sector and the oil and gas sector, so we think these are critical sectors that sort of have huge potentials in terms of supporting the growth of the economy and even accelerating private sector investment. So for the fiscal authorities, for one, there is need to sort of fashion out a way of eliminating the subsidy programs in these two sectors if they are to sort of encourage private sector investment. For the power sector, like you mentioned, there was a lot of optimism when the privatization exercise was implemented some years ago. However, the result has not really met expectations due to the fact that most of those distribution companies have not been given that freedom to sort of set tariffs that are market reflective. And as long as you have government interference in sectors where you don't allow private sector to sort of determine prices in line with current economic realities, that would continue to hinder private sector investment. If you look at the oil and gas sector, we still have the petroleum industry bill hanging in the air. And this is a bill that is expected to unlock billions of dollars of investment across the entire value chain of the oil and gas industry. So for us, we think the fiscal authority should, pay a lot of attention to these critical sectors and take those good steps to, address those challenges, implement those reforms if they are to sort of jumpstart the economy and place it on a more sustainable path of growth in the medium to long term.
Yeah, so we hope that PIB will be passed today, so we'll stop calling it a bill and it becomes a law, and we'll see all the potentials and the promises that it holds. Thank you so much, Gbolahan Olugunro, for sharing your thoughts with us this morning, and enjoy the rest of your day.
Thank you, Ine, for having me. Do have a nice day.